All right, we're gonna be taking a look at some Bitcoin trades as well as some Nasdaq trades. Maybe some gold. We'll take a look at it. If I want to keep it in the video, I will. But basically, what happened on this Friday on Nasdaq here, we took the morning trades. 3 trades, 2 on Nasdaq, 1 on the ES. But I wanted to take a look at the liquidity sweep after I got off for the New York AM session to see what happened, because I saw this develop, and that was a tall tale sign that something is going to be taking place here as a liquidity sweep, either today or sometime Sunday or maybe even Monday morning. But I did it on Friday. So whenever it ran liquidity, I look for a reason as to why the market would want to react to that level. So whenever it swept the liquidity, I would look for, I don't know what that was. After it swept the liquidity here, I look for a reason as to why the market would behave a little bit differently, right? So on the ES, we saw that in that same area, it reached for a new day opening gap over there, reached in for it immediately, turned over directions. You see how this candle went all the way up in there and almost hit 50%. And as it started to drop down lower, create a fair value gap here on the 1 minute time frame. There you go. Respected the 50% level the entirety of the way through. But basically, looking on the Nasdaq, which was the asset that I was really paying attention to, looking at this here, from that high to this low, from that low to this high, volume imbalance. I did not fill it in the whole time for the first time. So from here to there is the other part of the volume imbalance. We can double it up there. But the significance behind that is at the volume imbalance that was left open, it got respected by that. I mean, that it really can't be any more clear cut than that right there, right? So you have 2 different volume imbalances. One that went from the high to the low. One that was the remainder, hit 50% of the remainder, as well as it filled it in twice. But the significance behind this is that this is basically telling you what it's wanting to do prior to actually doing it. So not only that, but whenever you see a little bit more displacement, so you see more like a continuation down lower. Let me go ahead and do this for value gap. I forgot to put that on there. But there you go. So as it starts to tell you or show you that it wants to continue to go down lower by this fair value gap right there, you see the respect on the bodies, right? So the bodies are far underneath the fair value gap, as well as this one filled up the very top portion all the way really to the tick of this fair value gap there. And on top of that, we also had this volume balance in there, but we're not gonna touch on that. But anyway, hit the respect level on that fair value gap and immediately turned down lower and started to go towards the lower liquidity pools. So immediately took out the lunch session lows, which would be the most that I'd be looking for. If not, I'd be looking for 50% of the New York AM session, or even an imbalance right here, maybe on the 5-minute time frame. So what I would have my very aggressive TP to is either that fair value gap, maybe midpoint, or even all the way down to here if you're very, very aggressive. But this is probably a strategy that you want to hold to next day, but unfortunately it is the weekend. So I'm not a big proponent of trading over the weekend or holding over the weekend, especially at times like this, because we're just so unsure of what, excuse the noise, just boys being boys. But yeah, I'm not much of a fan of holding over the weekend in general, but especially with a war going on, anything can happen. So your position can be, flipped at any time. So I would not suggest doing that. But take a little swig. Yeah, so that's basically it. I mean, for Nasdaq, this is just we're more or less just looking over trades that happened on Friday after the liquidity sweep. So even if you didn't want to do that particular setup, like you didn't like this one, didn't like this one, whenever you see a bunch of choppiness coming back down lower, you can easily get in at an SMT. So you would see how the market. I probably go on the 5-minute time frame for this. So you see how different the market was. Where was it at here? There you go. How different the market was behaving. So that made just about a higher high. This one was obviously lower. I'll just put it there. And that could be enough for you to hold for a small position, right? So although we see this one was open there, for whatever reason, market didn't want to fill it in. Market starts to go against you. You can go from there, put your stop loss just out there. You can ask for just a 1 to 3 base, and that's it. And that'd be enough to, pay you out. And if you look for just 1 or 2 of these trades a week, it's more than enough. As you could tell, whenever we put on a little position here, little make believe position. Even if you're risking, one contract, a 1 to 3 will pay you, $575 twice a week. That's $1,000 a week. That's enough to just about replace a job. So even if you do that, 3, 4, 5 times a week, that's roughly 2 bands a week, $2,500 a week, and that's enough to surely replace your job. But of course, you want to do that for many months in a row, and with a repeatable system like this, then that'll be enough to replace your job within a couple of months of consistency. Although, if you have a schedule, this is my personal opinion, but if you have a schedule that honors, or at least has enough room for a New York AM session, and you work in the PM time in the evenings, then that'll work. If you work more in the morning, you can find time in the evening or afternoon to trade, then obviously that's ideal as well. But the ideal situation for me personally is trading the New York AM session and working in the evening. I like doing that a lot better, and it fits my schedule now, so it's perfect. But anyway, get on Bitcoin, see what we can find here. So the gap fill strategy is behaving exactly like I'd wanted it to, except for one of these days. Here we didn't get exactly the best entry in here for the run up in here, which is fine. But you can see all the respect. Hit this fair value gap and then immediately reverse down lower. I'll say reverse. It retraced and then filled in the rest of these fair value gaps. Although we have the ones above here, it's not exactly the most bullish asset. Or in the bullish times right now. So I didn't want to go and fill in all of them prior to falling down because it's not 100%, right? So as it's falling down lower, you can see all these gaps just sitting, just wide open. And stuff like this, you can look for trade opportunities, although, it did not want to go far deep enough for us to actually take the opportunity. So there's also no real way of getting in right here because it's not convincing enough that it wants to go and do that. I want to see some consolidation, then some displacement, retracement. So really, to be honest with you, this would be my entry opportunity, but it didn't even go to 62. So I would just wait for the next setup. So filled it in, over there, not enough opportunity to go for an entry right here, mainly because of all of the fair value gaps down in here, right? So although there's SMT down in here at this point in the day, because you can see how there you go. You can see how Nasdaq. No, I'm sorry, Nasdaq. The Bitcoin's going lower and the Ethereum is going higher. So that's you can easily tell that. But in this particular example, it's not going deep enough for us to see it as worth it. And on top of that, this part of the day is whenever you would typically see the market reverse. So it would make its initial move on London and have a bit of consolidation prior to the New York Open. And then once the New York, I say open, but whenever the liquidity is injected here at 8:30 a.m., whenever that happens, you see a reversal and then a continuation or a complete reversal and continuation. So this example, on lunch hour, which I did not expect at all in this particular part of the day, it created the SMT for a run towards the highs and into here. Although this would be a very high risk entry because there's so many fair value gaps open down in here prior to the move, I probably wouldn't take it. So right now it had a bunch of consolidation, SMT at the highs. This is very obvious in here, right about there. There you go. So in here, I'm obviously looking for shorting opportunities, and from there, this is the displacement that I wanted to see. It did not retrace enough to make it worth it, in my opinion, mainly because we have... Why does it keep disappearing? There you go. So down in here, I wanted to see the market push up a bit higher, so at 705, 79, and then fall down lower to fill in the gaps like in here or this one down there. Then I would have entered for a short opportunity, but didn't want to do that. So what I'm looking for, I do not want to see the market go below or go above this high or this high. I want to see the market respect these levels and start to go down lower and fill in the gaps and continue to go down lower towards 70,000. So at the current stage of the market, if I wanted to enter a bullish move from this low to this high, that would have been my entry. And you can see just how perfect it was at 79 right there, and then immediately reversed and then did its thing. Although it's very easy to have an entry point at 705, just be in an area of a high likelihood of it reversing. So buying one, and you can do it from $100 just about there. You probably do two, maybe three. Oh, just like that on $350, and then put it just to there, and it's a 1 to 2, 1 to 2-ish, 1 to 2.2. But that right there is perfect, perfectly fine to day trade. You do not need much more than this, and especially if you have leverage on your broker or whatever platform you use for trading crypto, then this is way more than enough than you would need to sustain yourself, like your day to day. This can replace your job 100%. So from here, all I'm really looking to do is just to have these gaps fill in, or at least the majority of them. Particularly this one would probably be the highest one that I want to see get filled in, which is why I have my entry there, right, to look for the short. So from there, there's consolidation. We had the dip down lower into the fair value gap. It reversed, wanted to consolidate it a bit, dropped down, took out liquidity, immediate displacement up, retrace down into the 705. Now the reason why I put the OTE there is because look at these big bars. Wicks up there, filled in the fair value gap, clearly showing us that I want to go a bit higher. Excuse me. Then had the retracement 705. That's your entry point. And then from there, the market, snap of a finger, immediately reversed up and then paid you your 1 to 3 or 1 to 2 or whatever that you were looking for. So you could even go all the way up to here, $900,000, whatever, and it would have just about paid you there for 1,000, almost. So it's just about making its way up there. Now I do expect it. It's Sunday evening. Not a whole lot of opportunity is going to be presented on Sunday evening. At least most of the time. Last Sunday it did, but most of the time it won't. Just like this is a perfect example. I completely expect it to push up into this one and even this one up here. However, I don't know if that's going to happen on Sunday or whatever. I'm not looking for the exact time of when it'll happen. All I'm waiting for is for it to do it. And once it does it, I'm going to be there to trade it, at least most of the time. But from there, I'll just leave it there. From there, that's pretty much it from Bitcoin and NASDAQ. Not too complicated. I think it's a pretty simple setup and strategy, but from here, you can definitely use Solana and whatnot to look for these trade setups. Same thing. So you see big displacement. You could potentially look for SMT short, and you can see this, how it fills in the gaps just about in here. It fills in the gaps in here. And it's night and day. I'm sorry. It's super easy, super simple to see and to predict this. And it pays you out like nothing. So just from here-ish, and from there, so you see how the market was definitely bullish in comparison. And then same thing on this one here. So what is going on? There you go. From there to there. So yeah, it's definitely bullish. This is much more bullish. So there's a liquidity grab, really. Grab the liquidity. Previous day's high over there. This is the week open, right? From there, this one definitely bearish. And from there, the market made the displacement leg down lower. Once you made the displacement leg, we can look for SMT, really whatever. Didn't give us this opportunity from here to there because I'm not sure. I guess we're it's a whole lot more bearish than I was expecting. From there, nothing, But if we went from here to here, which is definitely not enough, just about gave us 62. But I would not use that. It's not enough displacement. I would definitely use this. I would at very least use this, but it didn't pay us, or it didn't give us opportunity anyway. But I would use the whole displacement leg from the high to the low, and didn't give us 705, but it's fine. And then use that view up as resistance, and then displace a little bit more. And it did create a fair value gap from that high, that low, and just about respected 50%. Use view up as resistance, and immediately drop down. So you could have used this entry here as your entry. So once it went up there and then fell back down lower, you could have put your stop loss at the body, or really wherever you wanted to put it. And then from there, you could have held all the way till down to this view up, or you could have filled in you could have just went for this liquidity right down there. It wouldn't have paid you, all but 1 to 3, which is fine, but you could have gone for filling the gaps, even filled in this one down here. It even did 50% of the New York PM session, so it's pretty significant. But I mean, all that stuff being said, you got a 1 and 9 at the high end, 1 to 3 just to fill in the liquidity in here. You could have been conservative 1 to 3, and that would have been just fine. You know that if you risked $100, you would have made 300. Risk 1,000, make 3,000. So on and so forth. But that's essentially the strategy and how simple it is. And if you use leverage, in America it's 10x. So could have very easily made $100 turn into 1,000 on the low end all the way to the high end. I'm sure you know how all that stuff works. But that's essentially the strategy, man. I mean, it's not really all complicated. You can go from that high down to this low, and you see 705 was there, and it created SMT there. So you see high, low, 705. Not only did it get into it, but it created SMT. So this one was far lower. This one was much higher, and that would have been just enough to get you an opportunity to pay yourself, right? From this high to this low right there. Just about missed the 62. We just about got 62, but I don't really like trading at 62. But anyway, so lower definitely would have entered on the way down in here. And even after on the way back down, you could very easily get in at the retracement for a short and then watch it go down. But if you wanted to play it safe, this could be a good opportunity for you to short displacement for value gap right there. Good area for you to short. And then that's the rest kind of speaks for itself. But you even have SMT at the day open. So you see how this is definitely going lower. This is relative equal. This is lower. So that could have been a decent opportunity. This is the week open or the week high or low. And they did take out the liquidity, consolidate a bit, and then it started to. I'm expecting it to have this consolidation, maybe take out the liquidity down here, then make the run up higher to get the entry on this one, right? Now from there, I do expect the market to continue to go far, far down lower afterward. But yeah, that's pretty much it. I mean, even from here, the SMTs show up. This is lower. This is higher. This held. Obviously, the truth teller did not. So this one would have been a short opportunity for me, and I would have held all the way down to probably down here, 50%, maybe at the bodies. I'm not sure. Whatever I would have thought as it's happening. But even on Sunday, you do have great opportunities like this, and that's crypto. Nasdaq was butter smooth, and we could take a look at gold and see what we can find. But even from this high, this short opportunity, this long opportunity, just 5-minute SMT showing itself. So another thing that I was looking at was something like this. So on the 15-minute time frame, 5-minute time frame, once it takes out liquidity up in here, so this is the VWAP. This is an important area. New day opening gaps are here. Took out the liquidity up in there. So you notice how it went up to the VWAP, displacement down lower, and it was pretty significant, right? And then it went up and took out the liquidity above. Then it started to go down lower. So I don't really like trading that setup, but I know it's widely used. I don't really like doing that because it's more of a turtle soup type approach. I don't like trading turtle soup because I feel like I'm just way too contrarian in contrast to regular trading. So it's I'm shorting the very, very, very high or the most low. Doesn't make me feel comfortable. So with all that stuff being said, I mean, trading gold, although it's very lucrative, trading a strategy like that is a little bit too much. I'm sure we could go down to a 1-minute time frame and see what we can do as far as a fair value gap or something. So from that same thing, right? So this is this exact same kind of setup that we were seeing on the New York AM session on Nasdaq. So over here, drop down lower, low fair value gap, low volume imbalance here. You can even go to the 15-second time frame and see what you can find. But so took out the liquidity up there, volume imbalance, filled it in, dropped down. We could even do maybe. This is the displacement leg from that high to this low. Just about missed 705, but this one created SMT from that high to this high, relative equal. This high to this low was definitely lower, and then market went into the supply zone again and then sold off down there. So that could have been an opportunity because 15-second time frame on gold, I like it a lot. But excuse me, could have been VWAP, could have been this VWAP down here, all the way down to whatever this is, previous week. But that's essentially it. 1 minute gold. The way that I trade gold, remember, is on a 5-minute time frame. I trade SMT mainly. Sometimes if I do get a liquidity sweep or something, I get displacement, I'll look for the 1 minute time frame for value gap, something like that. But SMT, I mean, very nice. You go down to the 1 minute. You could even see how it fills in some fair value gaps. See the new day opening gaps there. So from there, this will hurry up, man. Why are you slowing down on me? Okay. So from here, SMT, any fair value gaps really, because it made the SMT, created a fair value gap from this high right there, filled it in just a little bit, and then it dropped down lower. Fair value gap, volume imbalance, filled it in again. So if we zoom in here, volume imbalance, love volume imbalances on gold, by the way. Filled it in perfectly, and then from there, you see how fair value gap from this high, this low to this high, just about missed 50%. But from there, filled in around 25%, 40%, dropped down lower, created volume imbalances on the way back down. As the market pushed up and filled this in, that'd be my short. I'd be waiting for a short just about in here, a couple ticks below, and I would have my stop loss in a conservative area. Probably, I don't want to see this high get taken out, so I'd probably do something like that up there. And I would have probably down to this low, to be completely honest with you. And that would be my one trading opportunity there, looking back at it. I've traded this way a lot whenever I was trading NASDAQ Asian session. I traded like this all the time. Volume bounces like crazy. I do have videos on that if you want to check those out. But from this high, make sure that's accurate. My stop loss in here, 200 to 1200 is quite a bit, 1 to 5 and whatnot. But that's just what's possible trading gold. Although I don't really trade gold like this. I just kind of get it on the 5 minute because it's going to do whatever it's going to do anyway. I don't have to be that precise with my entries or my exits, but I do trade on the 5 minute time frame, and whatever happens in these areas, it's just going to happen. I don't really care. But if I ever want to look at the 1 minute time frame to be double sure, I'll definitely do that. Now we can look on the second trade opportunity down here, see what we can do as well. So you see how we had the displacement leg, consolidation a bit, created the SMT, and from there, created a run up higher from this high to that high to that low. Excuse me. Can you please scroll? Motherfucker, dude. I can't scroll. It doesn't matter. So from here, this high, this high, that low, the market, I can't tell because I can't scroll. This is so gay. Oh, what's going on? There you go. So just about missed it, but in that fair value gap right there, market was drawn to it and then started to make its run higher. It's not 100%. It's not perfect every time. It's not going to follow the same rules every time, but it did have the volume imbalance right there, filled it in, and then reversed higher, filled in this volume imbalance. So the way that I would have done this trade was if I wanted to keep it a bit more conservative, because we are bearish for sure. And you know how being bullish in a bearish environment is not the greatest idea. So what I would have done here is I would have entered my long opportunity from this volume imbalance. And the way that I would have done it is I would have had it, I remember, like a few ticks above it, and I put my stop loss in a relatively conservative area down there, probably below this fair value gap. And then I would probably look for that volume imbalance to get filled in on the opposite side. This is exactly how I trade NASDAQ Asian session. This is exactly how I did it. But taking above this liquidity pool, remember, you're asking for quite a bit. The market ran up, reversed against you. You got to be able to hold on to that, and then it's already to pay you on the way up. You can do the previous week, low or high, whichever one that is, and I would have given you 1 to 5, but I was a bit more greedy. I went all the way to the VWAP, just about there, 1 to 7 on this particular trade if I took that one. But if you want to be double, triple sure, I entered down in there, push up, volume imbalance right there. That could be your entry, 0 drawdown, all the way up, push up, and it wouldn't have stopped until hit the VWAP, and even all the way up here to the weekly VWAP right there. So that's just what's possible, But I've been trading for 5 years, so all this knowledge that I've gotten from you has either come from my own visual experience or from ICT. To be completely honest with you, ICT in his videos has taught me probably 90% of all that I know, and the rest has come from my own time and experience from the charts, just doing it on my own. But if you found this helpful, my email is in the about page on my YouTube channel. Just go ahead and reach out to me and with any feedback that you might have. I keep comments off because people on the internet like to do stupid stuff. So that's pretty much it. If you have any questions, if you have my phone number, Discord, whatever, go ahead and reach out to me. And yeah, that's it.